Why Forex? Mechanics of Forex trading, cash flow in trading, margin and leverage, technical analysis. Speculation. 70–80% of Forex trading is for pure speculation. People who conversion. 20–30% of daily Forex activity is for conversion or delivery. If McDonald's Corporation wants to convert their Japanese yen JPY profits from selling hamburgers in Japan into domestic US dollars, they would transact with another counterparty, usually a bank, to sell JPY in exchange for USD. The two primary reasons people trade Forex are for buy versus sell. Forex trading is the buying of one currency while simultaneously selling another currency. These currencies, expressed in pairs, are always connected to each other, as the value of one currency cannot change unless it's compared to another. Trading in this marketplace is unique because there are equal opportunities to buy or sell these currency pairs. If you buy a currency pair expecting it to increase in value, you are going long. If you sell a currency pair expecting it to decrease in value, you are shorting. Whether you are going long or shorting in this market, one currency is always growing stronger against another, and one currency is always growing weaker, creating an opportunity for any type of trader. Mechanics of currency trading. Buy-sell. If you buy a currency pair expecting it to increase in value, you are going long. If you sell a currency pair expecting it to decrease in value, you are shorting. Currency pairs are just that, individual currencies that are paired up. Examples include Euro USD, which is the euro against the US dollar, USD JPY, which is the US dollar against the Japanese yen, and GBP CHF, which is the British pound against the Swiss franc. The first currency in the pair is called the base currency. The second currency in the pair is called the quote, or counter currency. If we say that the current price of your USD is quoted at an exchange rate of 1.2000, this would mean that 1.2000 of the quote currency USD is equal to one of the base currency euro. Buying a currency pair is the same as buying the base currency while simultaneously shorting the quote currency. By the same token, selling short a currency pair is the same as selling short the base currency while simultaneously buying the quote currency. If a trader thinks that the base currency will go up in relative value while the quote currency will go down in relative value, that trader should buy the currency pair. If instead a trader thinks that the base currency will go down in relative value while the quote currency will go up in relative value, that trader should sell short the currency pair. Currency pairs. The value of each individual currency is relative to other currencies. The euro, for example, only has value if compared against the value of another currency, like the US dollar. That is why currencies are traded in pairs and not as single currencies. Base quote. Buy-sell. Forex trading offers a limited number of trading instruments, namely, currencies, to help focus trading efforts on a few key currency pairs. In addition to the major currency pairs, Forex also offers trading on the commodity pairs, i.e., Australian dollar AUD USD and USD CAD Canadian dollar, and the major crosses, i.e., EUR GBP, EUR JPY, GBP JPY. These pairs are highly correlated to certain commodity prices. Generally speaking, the AUD USD and USD NZD correlate with gold prices, and USD CAD correlates with oil. These pairs do not contain the US dollar. The most common currencies traded are the US dollar, USD, Euro, EUR, Japanese yen, JPY, and British pound, GBP. The total sum is calculated on a 200% basis because each currency trade always involves a currency pair. Source: Bank for International Settlements Final Summary Tables, Currency Distribution of Global Foreign Exchange Market Turnover, April 2010. The most common currency pairs traded are EUR USD, GBP USD, and USD JPY. USD 84.9%, 13 British pounds, 19 Japanese yen, 39 euros, EUR USD 39%, USD JPY 14% GBP USD 9%. Most traded pairs, commodity pairs, major crosses, EUR USD, GBP USD. GBP USD, USD JPY, USD CHF USD NZD, AUD USD USD, CAD EUR GBP EUR JPY, GBP JPY. Currency pairs, commodity pairs, crosses. For example, if EUR USD moves up from 1.2000 to 1.2001, that is a bullish movement of 1 pip, which in this case is an exchange rate movement of 1/100th of 1 US cent. Major currency pairs can routinely move hundreds of pips per day. A standard lot is worth 100,000 units of the nominal value of the base currency. A mini lot is worth 10,000 units, and a micro lot is worth 1,000 units. For example, on the EUR USD, each pip movement on a standard lot trade is the equivalent of a $10 movement. Each pip movement on a mini lot trade is the equivalent of a $1 movement. Each pip movement on a micro lot trade is the equivalent of a 10 cents movement. Pips. Lots. Pips are the primary units of movement for all currency pair exchange rates. Lots are a measurement of the number of units of a currency pair that are being traded. Using lots simplifies trading in the Forex market, as it provides a standardized trade size. Pip fractional pip 1.20014 1 000 10 000 100 Pip fractional pip standard mini micro. Providing an additional tenth of a pip allows traders to minimize their costs and take advantage of even the most minute market movements. Fractional pip. Cash flow in trading. When a trader opens and closes a position, his account is credited and or debited a notional amount equal to the size of the trade times the exchange rate. The trader doesn't necessarily see the amount that is transacted. For ease, he sees the current profit and loss that is reflected by this cash flow. To help you better understand this idea, Let's look at the following example. If the price of your USD rises to 1.2512, Mike may want to close his position by selling the same euro amount of 100,000. Upon closing his position, his account will be credited the dollar amount of. Mike wants to buy one standard lot 100,000 units of your USD at the price 1.2350. In order to buy euro, he has to sell the US dollar amount. Open position. Buy sell it at 100,000 1.2350. 100,000 1.2512 123,500 125,120. Upon opening his position, Mike's account was debited USD in order to purchase euros. When closing his trade, Mike received a credit for buying back the same amount of units of currency. The trade profit is the difference between the two. Close position. Units your USD price your USD price. USD 123,500 United States dollars. Overall profit equals 1,620 United States dollars. 125,120 United States dollars. USD. Margin and leverage. Traders and brokers are only exposed to the change in market value on open positions. The change in value of most currency pairs moves about $1 a day. In fact, in 2011, the average value change for the euro USD per day was $1.57. The USD JPY average value change was only 88 cents. That's not much. As a result, the retail traders are given leverage on open positions. Leverage allows traders to control large positions with a lower amount of funds. That can be good, but it can also be bad. Leverage amplifies your gains as well as your losses. Asterisk NZD equals New Zealand dollars CHF equals Swiss franc. Euro USD GBP USD AUD USD CHF NZD USD CAD USD JPY. Asterisk. Average USD value of daily range dollar in 2011. $1.57, $1.40, $1.35, $1.25, $1.10, 95 cents, 88 cents. Since foreign exchange traders are not executing for delivery in retail foreign exchange trading, i.e., actual cash flows are not physically exchanged, the positions taken are said to be in notional amounts. A notional amount is the nominal or face amount that is used to calculate payments received or paid. The actual cash amounts do not change hands and therefore are referred to as notional. Notional positions. Let's look at an example of the effects of leverage. Mary deposits 10,000 United States dollars in her account at FXDD. She is encouraged by a strong U.S. employment report to buy the U.S. dollar. Since she feels the Japanese yen is too high, she buys USD JPY with the expectation that the USD will appreciate against JPY. Remember, JPY will depreciate relatively as USD rises. Mary buys one standard lot, a notional amount of 100,000 United States dollars, of USD JPY, at a rate of 79.50. See next page, Figure 1. To control that position, Mary needs to post margin from the 10,000 United States dollars of available funds in her account. With 50. 1 leverage. Mary need only pledge 2,000 United States dollars as margin on a 100,000 United States dollars position. Moreover, since there is 8,000 United States dollars of unpledged funds still in her account, 10,000 United States dollars, 2,000 United States dollars margin used, Mary has room to take an even larger position if she so desires. Let's assume Mary is correct and the USD JPY price moves higher from 79.50 to 80.00. At 80.00, Mary is content with her gain, and she takes her profit by selling an equal 1 standard lot of USD JPY. See next page. Figure 2. Let's now look at her profit and how the leverage helped her. See next page. Since Mary's FXDD account is in USD, JPY profit needs to be converted into USD at the current USD JPY exchange rate, which in this example is 80.00, implying that 1 United States dollar equals 80 Japanese yen. Therefore, her profit from 50,000 Japanese yen would equal. For ease, your trading platform automatically computes these calculations. The return on investment margin gives a trader an idea of how much they made or lost on a trade in terms of the investment or margin applied. In our example, we know Mary pledged 2,000 United States dollars of margin to her USD JPY trade and made a profit of 625 United States dollars. To calculate her return on investment margin, divide the profit by the margin. Please keep in mind that if the market was to move against Mary's position, she would have lost funds. For example, if Mary bought 1 standard lot of USD JPY and the price moved 50 points in the opposite direction, from 79.50 to 79.00, she would have lost 632 United States dollars and 91 cents. The possibility exists that you could lose all of your initial investment and be liable for additional losses. Trades, cash flows and profit. 100,000 United States dollars. 79.50 United States dollars per JPY. 7,950,000 Japanese yen paid on buy. Profit. 100,000 United States dollars. 80,000 USD JPY. 8 million Japanese yen. JPY 8 million 7,950,000 Japanese yen equals 50,000 Japanese yen. Received on sale. Sell. At. JPY profit USD JPY exchange rate 50,000 Japanese yen per JPY 80 United States dollars. 00 equals 625 United States dollars. 00. Profit margin. / margin. 625 United States dollars 2,000 United States dollars equals 31.25%. Figure 1 Figure 2. Technical analysis. Technical analysis. Because the Forex market moves so quickly and aggressively, currency pairs are said to be highly trending, with a pair's value often following a pattern of growth or decline. With so many trades going on every day, we are able to utilize common analytical tools to detect patterns and make predictions. Technical analysis attempts to predict future price movement by analyzing past price patterns and mathematical indicators. Price charts are the primary platform used by technical analysts. These exchange rate charts show historical price patterns that can be used to help predict possible price events in the future. Some key technical analysis tools and techniques include trends. The concept of trends refers to a net price movement over time either to the upside or to the downside. Currencies tend to trend frequently and for fairly prolonged periods of time. Trading with a trend is often advocated because, in doing so, the trader is trading with the general net flow of the market. Trend lines: downtrend, uptrend. Important chart patterns include triangles, flags, pennants, rectangles, wedges, head and shoulders, and double and triple tops and bottoms. Usually, a trade entry on a chart pattern is triggered on a breakout of that pattern. Chart patterns track price action across time. These patterns can provide key clues as to future potential price movement. Chart patterns: support and resistance exist because of market memory. Market participants remember certain past price levels, regions where prices turned, and they then act upon these levels in their trading. One can therefore predict enhanced trading activity when prices reach these levels. Support and resistance levels can be used whether traders are trading breakouts of these levels or bounces off these levels. Support and resistance represent important characteristics of all financial markets. Support can be considered a price floor, while resistance represents a price ceiling. Resistance, resistance, breakout, support, support, support and resistance. Triangle patterns: symmetrical ascending descending. Moving averages. Moving averages are running averages of past price action over a predetermined period of time. These indicators smooth out often choppy price action and can provide useful indications as to price trends and trend changes. Moving averages. Ask bid. Indicators and oscillators. Most of these indicators and oscillators provide indications of possibly overbought and oversold price conditions, as well as trend determination and trading signals. There are many mathematical indicators and oscillators that can be overlaid on a price chart. ADX indicator TREND 25%. Fibonacci trading is based on the golden mean and provides trading ratios that can be used in determining potential target price levels and possible price turning points. The Fibonacci sequence is a mathematical construct based on historical mathematical observations that have been adapted to financial market trading. Fibonacci. Indicators and oscillators. Accumulation distribution volume RSI overbought sold. Buyers territory above 50. Sellers territory below 50. Fibonacci. Ask. Sell. 0.0%, 23.6%, 38.2%, 50.0%, 61.8%, 100.0%. These patterns can be effective in highlighting the conflict between bullish buyers and bearish sellers, and therefore can provide clues as to potential impending price movement. Candlestick patterns are analyses based on the size and alignment of price bars, OR candlesticks. Candlestick patterns. Candlestick pattern. Going long 3 method formation. Going long Hara MI. Shorting 3 method formation. Going long Hara MI cross. Shorting Hara MI. Shooting star. Dark cloud cover. Shorting Hara MI cross. Spinning tops. High-low sequence. High. Low. Close. Open. Close. Open. 1. 2. Close. 1. 2. Open. Fundamental analysis. Fundamental analysis involves the analysis of the influences that may cause a currency pair to move higher or lower. Generally speaking, a currency pair will move higher if the economic influences of the base currency are more positive on a relative basis than the economic influences of the quote or term currency, and vice versa. If, for example, the EU economy is weaker than the US economy, the EUR/USD should go down. If the Australian economy is stronger than the US economy, the AUD/USD should go up. There are many economic factors that can cause an economic bias, which then affects the value of currency pairs, all of which are interdependent due to our increasingly global economy. Pure fundamental traders tend to focus on the longer-term trends of economies. Those judgments are typically derived by analyzing the trends of economic data. If the trends suggest economic growth of a nation, this will positively affect its currency. If the trends suggest economic decline, this would negatively affect its currency. Economic data for each country is released on a scheduled basis. FXDD has a calendar available on its website at. Fundamental analysis involves the analysis of the influences that may cause a currency pair to move higher or lower. Fundamental analysis. Fundamental influences. GDP. Interest rates. Inflation. Employment. Retail sales. Trade balance, current account, central bank policy, fiscal policy. Stock prices. Gold prices. Commodity prices, even currency values. Creating a trading plan. By detailing all aspects of your trading in a comprehensive plan, you can eliminate ambiguity and potentially negative trading behaviors. A plan for trading is similar to a plan for any other business. It is essential to ensure that the business owner, trader, sticks with a well thought out and tested approach to growing the business while minimizing risk. Elements of an effective trading plan should include all of the most important aspects of the trading process. This should include, at the very least, as a part of this plan, traders should also keep a detailed journal of all trades, with reasons for entries, exits, so that there is an ongoing assessment of exactly how well the trading plan was followed. Creating a solid trading plan is one of the keys to becoming a successful trader. Trading plan. Amount of starting capital to be used for trading. Primary lot size and leverage used. Primary currency pairs traded. Maximum percentage of trading capital risked on each trade. Reward to risk ratio. Target realistic daily, weekly and monthly profit goals. Specific daily, weekly and monthly loss limits, the point of monetary loss at which a trader stops trading for the given period. Specific trade entry criteria according to the tested trading strategy. Specific trade exit criteria, stop losses, profit limits and/or manual exits, according to the tested trading strategy. Methods for managing open trades. Methods for managing open trades. How we got here. Ancient times. Currencies are developed to exchange for goods and services. 1944. The Bretton Woods Agreement is reached, fixing the exchange rate of 44 nations to the US dollar. 1996. Retail Forex trading begins in earnest. 2002. FXDD is founded in New York City. 2009. FXDD receives NFA approval. FXDD opens its 100,000th live account. 2011. FXDD wins awards from the ME Forex and Investment Summit and Global Banking and Finance Review. FXDD opens its 200,000th live account. Middle Ages. Paper bills are exchanged in addition to metallic coins. 1971. The Bretton Woods Agreement ends, allowing currencies to float freely. The US dollar becomes the primary reserve used by many countries. 1999. The euro becomes the official currency of the Eurozone. It becomes the second most important reserve currency after the US dollar. 2007. FXDD opens its 25,000th live account. 2010. FXDD wins 6 FX Trader Choice Awards, including Best Overall FX Broker. Malta Limited is granted licensing by MFSA and starts operating in EU. 2012. FXDD is recognized as an Inc. 5,000 fastest growing company. Quiz yourself answers on PG. 25. Question 1. Leverage PG. 5. According to the NFA and the Dodd-Frank Act, what is the maximum leverage a U.S. trader can have? A. 1. 1B 50. 1C 100. 1D 200. 1. Question 2. Buy versus sell PG. 6. In the case of EUR USD, if you expect the EUR to appreciate in value, what would you do? A. Short the EUR. B. Long the EUR. Question 3. Currency pairs PG. 8. Which of these is not considered a major currency pair? A. EUR USDB GBP USDC USD JPYD EUR GBP. Quiz yourself answers on PG. 25. Question 4. Currency pairs PG. 8. Which currency correlates with gold? A. AUDB USDC CAD CHF. Question 5. Pips PG. 9. What is the name for the smallest unit of movement a currency pair can move? A. Jump. B. Point. C. Pip. D. Slip. Question 6. Lots PG. 9. If you are trading one standard lot of EUR USD, what is the value of one pip movement? A. 10 cents. B. $10. C. $1. D. $100. Quiz yourself answers on PG. 25. Question 7. Technical analysis PG. 14. What method of trade analysis uses past price patterns and mathematical indicators to predict future movements? A. Fundamental. B. Chart. C. Technical. D. Graphical. Question 8. Fundamental analysis PG. 19. Which of the following is not considered an example of a fundamental analysis event? A. Non-farm payroll. B. Fibonacci retracement. C. Monetary policy statement. D. ECB President Mario Draghi speaks. Question 9. How we got here PG. 21. When and where was FXDD founded? A. 2002 in Los Angeles, California. B. 2003 in New York City, New York. C. 2002 in New York City, New York. D. 2002 in London, United Kingdom. High risk warning. Foreign exchange trading carries a high level of risk that may not be suitable for all investors. Ask FXDD. Contact information. Talk to a Forex specialist in real time. plus 356.2013.3496. Sales at fxdd.com.mt. Ask FXDD. FXDD is taking its education to social media. Log into your personal account and ask US Forex trading questions. WE will publish the answers to your questions on YouTube, Facebook, and Twitter. If you'd like more information on FXDD and trading Forex, we'd love to hear from you. Quiz answer key 1, B, 2, B, 3, D, 4, A, 5, C, 6, B, 7, C, 8, B, 9, C. Live chat. Call US. Email US. Continue your education. Do you have questions about Forex?